FX Nation, what's up guys? Welcome back to the channel. Welcome back to another video. And guys, we're doing our Forex daily market maker setups. So you already know what this is about. We just started a new series yesterday. So let's go ahead and continue on today. And let's show you some of the trades that we're taking today. All right, let's go ahead and get this started. All right guys, so the first trade was on Euro CAD. And before we go into the 15-minute chart, real quick, when we talk about like we did yesterday about PTC, let's look at the cycle real quick. As you can see, we had a peak formation low here. We ended up having basically two levels of rise so far on a 1 hour chart, right? So this is essentially level 2, and then this is level 1. All right, so that's where we are essentially in the cycle. Okay, just so you can get a context of what we're about to look at when we go over to the 15-minute chart here. All right, so on the 15-minute chart here, the trade setup was pretty simple. Being that we know that we're on a second level on a 1 hour time frame, okay, we know essentially that we can get an opportunity essentially to take a trade down, right, or a sell essentially. The sell itself is a very short-lived trade because the bigger move that we're really looking for is going up, right? So essentially what we ended up getting here is a type 2 setup during the London session. So we talked about this trade during our trade room in the London session, and essentially the trade itself is pretty simple. You end up getting essentially it's a 30 pip trade down to the 200 EMA. Okay, is what it is. So it's 30 pips, very simple, trade to take, and 2-to-1 risk reward ratio. You get a type 2 setup here. Reason we get a type 2 is if you go to this line chart, you'll see the M formation here. So there's your pattern. The timing of it is correct, obviously, because we're inside of the box. And then what other evidence do we have? Well, obviously we have price pinning to the top of the Asian range, also pinning to yesterday's high, which is this yellow line here. And you can see this is yesterday's high here. So you can see that this basically leads to a pretty nice setup going back down to the 200 EMA. Okay, so that was the trade essentially that was taken. So if you guys were on the US session, then you actually got a reversal trade back up, which is a nice W pattern here, which would have been the trade basically that takes you outside and goes up to another level. And that's essentially what this would have been here. Okay, so two trades back to back on the same pair. Doesn't always happen, but you can definitely get these from time to time. So on this, obviously we're pinning to the 200, and then we're also pinning to the 800 as well. Here 200 and 800 are both acting as support and resistance, and we get the pattern, right? Second leg here is in the box, so pattern is correct, timing is correct, the cycle is correct, because we know we're in second level looking to go up one more level. And essentially you have a trade here that, depending on your entry, whether your entry was down here when it was pinning on a railroad track to the 200 and 800, or whether it was up here because you waited for this to cross or go above the 13 EMA, I mean, regardless, you still got over 30 pips out of that trade. Okay, and as you can see right now, it's still going. All right, so that was the first trade. The other two trades that we're going to talk about are Euro NZD and Euro AUD. Pretty much same thing, very similar on these two pairs, Euro NZD and Euro AUD. If you didn't know, they run regularly together, meaning that they make pretty identical moves all the time. So this particular trade would have been a type 1 setup, okay? And what we're looking at here is basically Asian range is 57 pips. So not the ideal Asian range because a lot of the move has already happened. But essentially you got a move straight up, tagging the yellow line here, which is yesterday's high. That's 1. Look on the line chart, you get the M here. That's 2. So you got the pattern. Timing, of course, is correct. As far as cycle goes, if you go and look on a if you go to look on a 1-hour chart, okay, where are we at? If you look at this, okay, we're basically at a level where we could very similarly see on EuroCAD where we need to go at least one more level up. Okay, so we know that the bigger move essentially is to the upside. So you could say this is your peak, this is your 1, this is your 2 up here, and this could be 3, and then you'd have one more basically to make peak formation. Okay, now knowing that essentially you have that, okay, you basically have a short trade back down, very similar to what you had on EuroCAD. All right, so the trade setup was basically trying to take this down back to the 200 again. That's literally what the trade was. Okay, it's trying to basically take it down to the 200. That would have given us 30 pips, 15 pip risk reward ratio. So it's a 2-to-1 risk reward ratio on this trade. Now, this trade, as you can see, it did not make it to the 200. It only made it to the 50. Okay, so this basically was a break-even trade, meaning that we got out of the trade after 6 candles. If you don't know what I'm talking about, again, all the info, all the videos and stuff are in the Trading with Market Makers playlist. You can watch that playlist that has everything that we're talking about. But we have a rule, 6 candle rule. If you're not in profit after 6 candle, if you're not in substantial profit after 6 candles, get out of the trade, break even, or take a small loss, whatever it is. This case here, same thing. We had basically pinned to the 50 and then railroad track. So that was a pretty sure sign that we were just going to continue back up, and so got out of the trade as a break even. Okay, same thing, essentially the same thing on Euro AUD. All right, same setup. All right, literally M on this pair as well. Okay, and this one also break even trade. Okay, entry was right after this candle, and then you can count 6 candles. Really, you didn't do anything. You didn't go anywhere. You weren't in any kind of substantial profit or anything like that. Okay, so you had, again, same thing, railroad track on the 50 here, and then you're already outside of the box. So take the break-even trade, short loss, whatever, move on. Not a big deal. A couple clues that you may be asking yourself, like, well, how do we know that this is going to go higher? Okay, well, if you notice how this orange line here, not the one for the Asian range, but this one here, this orange dotted line here, this is basically previous week's high. Okay, so this line is where the previous week's high was. Okay, anytime you get into this this area, this range here of previous week's high, previous week's low at the bottom, basically you're in a continuation, you're in a trend, right, going in one direction. And so anytime that you're basically passing the previous week's high, you're in that area of previous week's high, and you're not, let's say you're not here trying to go down, right, you're already above it, then a very high chance, if you are trading above this previous week's high, that it's just going to continue up, making a swing. If you look from the previous, we've been trading up basically, right? If you go up to a 1-hour chart on this, you can see you've been trending up the whole time from the peak low here, So if you're already passing the previous week's high up here, you're trading above it, expect to go higher. You can expect this to go all the way probably up to here, to the week before that's high. But yeah, so that's how we knew we were gonna. This is a short-lived trade, essentially, is what we're looking for. Next trade was Euro USD. This one was brought up by a student asked me, what do I think about Euro USD? You know, where do I think it's going to go and stuff like that. So very simply, you know, if this was like this actually at the time. So question becomes, okay, what do I think about Euro USD at this time? Okay, well, if we go back, just back up to the 1 hour chart, okay, where are we? All right, if you just had, let's say, a low here, okay, and then this right here is one level, right? So we're still at L1, level 1. All right, what are you looking for? You'd be looking for buys, right? So I was like, look, wait for this to come down, possibly hit 800, 200, and then look for reversal, look for buys. That's what you want to look for. You don't want to look for anything else. Okay, you want to look for buys because you know that that's where the bigger picture is going. Okay, so if you can get a pattern to go with that direction, by all means, take the pattern, take the timing, and go with it. Okay, so this ended up getting a nice setup actually during the U.S. session. Okay, so as you can see here, there's your setup to go up. There's your W pattern there. Second leg was in the New York session, and then you're going up. The trade that was taken was this one right here. Second leg W during the U.S. session, got more than 30 pips out of it. Very good trade. We normally don't trade Euro USD a lot because it just doesn't move a lot at one time. As you can see, the average range is 45 pips, so it's not really anything that's really attractive at all. All right. Pound JPY. Pound JPY is very interesting. We talked about this also during our trading room during the London session, and essentially, I told everybody look for the setup to happen during the U.S. session. Why? Because during the London session, we did nothing but move sideways, straight sideways, straight sideways. So if you're moving like this and you see this behavior spike, 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 there's nothing happening at all during that session. It's going to happen during the U.S. session. Okay, so what happened? That during that gap time here in between 7 and 8, we got the setup going up, pinning to the 200 railroad track. There's your trade back down, and literally you were out in like 4 candles. Okay, there's your 30 pips, and you were done. All right. For this one, as far as cycle goes, you were looking for a sell essentially because this was peak up here, and then if this would have been your L1 here, your level 1 here. So you're looking for sells. Okay. So that was pound JPY. And then the pound CAD, pound USD, pound Swiss, pretty much all had very similar setups. The trades really just came in during the U.S. session, and if you wanted to take a picture of what, and put it up on your wall of what a continuation trade would look like during the U.S. session, just look at pound CAD, pound USD, and pound Swiss. More the pound Swiss and the pound CAD. Because literally, you had the same thing that happened last week. Okay, you had straight move right out of Asia. Same thing. Move straight out of Asia, straight up. Came back down, pinned to the 50 EMA. And what did you have? Opening of the U.S. session. Where are you? You're about, what was this? About 20 pips or so. 50 pips from the high of the day, from the perceived high of the day at the time. And, from the low, you were another 60 pips. So where are you? You're in the middle. You're not at the top. You're not at the bottom. You're in the middle of the range. So if you're in the middle, okay, look for something to tell you it's a continuation trade. All right. So we had a railroad track here that happened outside of the box. We had it pinned to the 50. And then also it's pinned to the top of the range. So all these things come together, okay, and provide the evidence that you need. Not to mention, if you backtest, you see this stuff all the time. So you got a trade here well over 30 pips, easy. Pound USD, same thing, literally same exact thing on Pound USD as Pound CAD. All right, pinned to the 50. This one also pinned to 800. Again, railroad track here, and then you were literally about the same distance. This is 30 pips from the top, and from the bottom, I mean, you were 40. So you weren't at the top, you weren't at the bottom, you were in the middle. So what do? As long as you got the evidence, it's a continuation trade. And you had it, again, 2 trades that were well more than 30 pips each. Okay? So you had 2 break-even trades, and then, 1, 2, 3, 4, 5 trades that were successful. All right? So guys, again, keep things as simple as possible. Don't overcomplicate this. Some of you guys are trying to find some golden ticket, or some kind of easy button or something like that. The easy button comes in after you backtest and after basically you know your pairs. All right, guys, until next time, thank you so much. I hope this video showed you and brought some value to you. And again, if you guys need any help, we have a mentoring class coming up next month in March. So guys, thank you so much, and have a great evening.